to come on because our last webinar, we got so many questions about fundraising afterwards and before, about how to approach it during lockdown, how to prepare to start fundraising once this lifts, and how to really think about your cash reserves and making sure that you're able to weather this storm. So what I think we're going to do is hopefully we're going to be able to raise your hand in this one. So Matt's going to talk to us for a little bit, and then we'll take questions from all of you, and I'll call on you, and then you can ask the question using this like raise your hand feature. So thanks for joining, and I'll let Matt take it away.
Oh, well, thank you so much for having me. This is a really important time to be able to have this community. All of us, I think we're meant for community. And so I'm glad to be here. Hopefully it can be helpful. I'm the founder, managing partner of ARCADIAN Fund and ARCADIAN Capital Partners. We're a growth equity investor, and we are involved in quite a few companies, about 35, and they exist all throughout the supply chain. And so over the years, we've really been able to see different aspects evolve. And now is sort of a pivotal time in human history in every industry, but certainly ours. And it's really interesting to see some of the things that are taking place, and want to be able to share some of that with you guys today. So, Amy, do you want to just go sort of through a question answer type of a dialogue? Do you want to participate? Should I just kind of give a high level overview of some things?
Yeah, do you think you give a high level overview of kind of where you see, what you see happening in the space now, what you see happening in the like kind of capital flow in the next, 3 months, 6 months, I think kind of pretty immediate. And then maybe some thoughts that you have, and then we'll move to questions.
Okay, you just opened a big can there. Beautiful information, and excited to unpack that for everybody then. So we'll just do that to the best we can. So, essentially, we look at this point in time in three ways. I think you really have to look at the industry before the pandemic, understand what was happening, then try to make sense of what has happened over the last month and a half. And then I think you have to kind of look at what the future might be like. And for our industry, what I think is really fascinating to see, Amy, is when you come into a pandemic like this, you start to look at your entrepreneurs and all these businesses. And the one thing we found out very early on is they were not scared for this. They were not scared for this moment. And you just felt like they were battle tested. This industry, if you're an entrepreneur, if you've been around 5 weeks or 5 years, how much work is required. And you thrive in it. And it's a responsibility that we all have, given the seat we're in, driving this beautiful industry forward. But you've been working very hard for a long time. You've had to deal with keeping up with major growth for the first number of years. You've had to keep up with public market asset revaluation, the correction that happened there for a year. You've had to deal with the vape crisis. You've had to deal with, and so we're in a pandemic. And yes, it's absolutely terrible, and we need to be sensitive to that. But the reality is, actually does some interesting things for our industry. I would argue that there may not be an industry on the planet that is going to be as benefited by this as cannabis, and for many, many, many reasons. But primarily, I think the fact that the people that are driving this industry forward, all of you founders, the magic of this, are ready for the moment. I mean, that's the answer. You just have watched the industry get to this point. And by the way, 36% growth last year. I mean, people think the industry didn't do so well. You had recorrection in the public markets. It's an emerging industry. You shouldn't be public anyways. You probably shouldn't be public anyways. Outside of a handful of companies, the 250 that are listed that think they should be there probably should not be. And so the industry grew 36% last year. It's a wonderful thing. It went to 16.5 billion from a little less than 12. I mean, you ought to be able to build a very nice business with that being the case. So we're very strong going into the pandemic. We are tested. We're battle tested. We're excited. We're encouraged. You just feel like we were as ready as any industry for this to happen. Now all of a sudden a pandemic happens. And what does that mean? Well, we always talk about the fact that we're recession proof, or we would be, right? We always say cannabis will be. Well, here's our moment. Here's our moment. What's happening? What's interesting is you don't really know about a pandemic. I think pandemic and recession are two different things. Is it the economy? Is it a war? A pandemic's different. So if you look at an industry like alcohol, you always talk about alcohol as a recession-proof industry, but in a pandemic, different things to look at. In alcohol's case, they lost roughly 80 to 85% of all lines of revenue by being a pandemic versus a recession, because bars, restaurants, events, everything's closed down. Well, interestingly enough, cannabis today, and this will change in the future, and maybe there's a few places that have this, but you cannot buy and consume publicly, socially, commercially. And so going into the pandemic, I think what's really interesting is that we didn't really lose many lines of revenue. I mean, some places are saying, hey, adult use, you have to shut down. Some places don't really know yet. But for the most part, medical businesses are there, and you're able to get access to this medicine, which is what it is, regardless of the form you buy it in. And that's very rare as compared to other recession-proof industries. So by the way that the rules are set today, I think that's a very important thing to be confident about, the fact that we'll do very well. Amy and I were talking about this earlier. We saw a tremendous spike in the first 2 to 3 weeks, 2 to 5 times growth. Basket sizes larger than normal, 25 to 30% larger basket on top of higher than normal purchasing. That has normalized a little bit, but that was expected. It's fine. It's absolutely fine, because the big picture is better. The big picture is better. So we were strong going in, feel very strong during, relatively speaking, feel very strong during, but what happens next? And what you look at, some of the trends that are happening in consumer behavior throughout industries that, can survive or thrive during a pandemic, you then have to question, well, what happens when the new normal sets in? I don't know if we know what the new normal is yet, but it will be more normal than this. In the case of Zoom video, which we're on, and it's been wonderful for a lot of people, yeah, I have to tell you, this isn't going to work for me and many people when we can get back to seeing people. I want to get back with Amy and give her a big hug and get some business done and help companies thrive. This isn't going to work all the time. It will a little bit, and it will change that consumer behavior. But in cannabis, you can't go back. If you develop this habit today, if you develop this behavior pattern as a consumer, which is what we want to do, and people are searching for it more than ever right now, online searches, delivery, crazy demand. If we can get them to understand that this is a consumer behavior pattern that's better and a higher quality life for them during this time, they can't leave that line and go back to anything else like Zoom. People are going to take meetings. They're not going to do Zoom as much as they are right now. Maybe some more, but not entirely. People want the other solution, and it's a better solution, frankly. But in cannabis, if you can get your consumer to develop that habit right now, they can't leave you. So we may be the only industry in the world whereby going in, we were that strong. During, we were strong and normalizing and relatively speaking, as good as not better than any other industry. And then post, being able to maintain everything we built. So I think you have to be encouraged right now. I think you really have to be encouraged. And I think because of the essential business tag, everything changes long-term, everything. This is a great case study for us to say, economically speaking, consumer behavior patterns speaking, all these things we're finding out about ourselves right now are great to add to the story. But what changes absolutely everything is the fact that we are essential. Can't wait for all the people fighting for our industry to have that conversation in whatever format they do and be able to bring that in there with them. Changes the conversation. So, I think I wanted to just throw that out as sort of some encouragement. I think you also have to look at the economics of the situation. We long thought that after the presidential election, regardless of what happens with the Senate, with Congress, with the election, with the presidents, I think that you see a scenario whereby longest bear run in history, you probably see a turn or a correction at some point regardless. You have to think Trump probably wants to do everything he could have to keep the economy strong for the election. You know, this happened now. So what we thought may have happened after the election in terms of maybe being a little more bearish happened a lot sooner. And when that happens for major institutions and major asset allocators and major Fortune 500s and 1000s, they need to find alternative asset classes to generate that extra yield that they're going to lose in the majority of their portfolio. It's just going to happen. You know, we see people lean into Microsoft, you lean into Apple, you buy the best companies that you think aren't going anywhere, and you buy them as low as you can, and you can feel pretty good about that. But there's not that many of those. And so the rest of these stable asset classes, now all of a sudden, 80% of your portfolio is not going to return what you thought. And so you have to kind of dip into your alternatives, and maybe that 20%, how can you get a little extra yield there? So we do think the grass tops are going to be motivated now, economically speaking. They need to figure out a place they can go in and really lean in and help support something that they can generate extra return that may be gone now. Governments need to make up tax loss. There's a major tax loss thing for them. So they need to create tax revenue. They need to create jobs. All these things, all of you guys know, but it's worth reiterating the fact that we see a lot of beauty. We see a lot of beauty in this. And I think that most often when you have a villain, villains create heroes. They just do. And the greater the villain, the greater the hero. And if you're not a doctor or a nurse on the front line, you know, what else can you do in this moment? What can you do in this moment to make the world a better place? Well, if you're on this phone call, it's probably because you have something to do with bringing this plant medicine to the world in some form, or bringing these hemp fibers to the world in some form. So that to me is the best thing a lot of us can do right now, is advance this industry, recognize its potential, be encouraged by it. And let's go into some further questions in terms of how do we get there. But I think at high level, we feel really, really, really good about where we are today.
Okay, so I've unmuted myself. I have a couple follow-up questions for you before we take other questions. I thought you said something really interesting, which was that, you know, we're allowing consumers to learn some new behaviors, right? The online ordering and delivery, and that cannabis, the way we're reaching our consumers is morphing and growing. Maybe morphing is not the right word, but it's expanding. And, you know, the first people that got let go in a lot of the cannabis companies are the marketing people. So I'm wondering if you're seeing a clash between, thank you, if you're seeing a clash, this is the best part about working at home. So if you're seeing a clash between the fact that like the marketing people are kind of the first to be cut versus the fact that we have an opportunity to like teach these new behaviors, do you think we're doing enough with the way the cannabis industry is reaching out to new customers at this time, encouraging people to buy, encouraging people to consume who maybe haven't consumed before? It's something that's been on my mind, and you said it, and I thought it was interesting.
Really interesting data right now. And I think to give you a proper answer, we're going to need a little bit more time, because the data that's coming in every day is sort of blowing our minds right now. And we have a lot of companies in the supply chain of the industry, so we can see a lot of this movement. And from a consumer behavior standpoint, we're seeing crazy things happen. You know, demographics that don't normally buy certain products are buying those products. Demographics that are usually buying certain products in larger quantities are maybe buying less of those and more of others. And so I think what you see overall is that the consumer behavior patterns right now in this moment are being developed. Even if you're a longtime consumer, you're sort of saying, well, I've used flower for all my life, haven't really had time to experiment or test all these other things. Maybe this is that time. And so I think you even see, you know, more consistent users branching out. Certainly you see the new consumer come in. You might see a 70-year-old individual who has a basket, we're seeing that they'll buy the knee cream, they'll buy a tincture, they'll buy something for their dog, something to make them happy. I mean, it seems like they're trying out everything right now. And so if I'm a brand, if I'm a consumer facing business, I am doing absolutely everything possible right now to get in front of people, to get in front of them, because this is actually how you have as a vehicle to get in front of people anyways, today or before the pandemic, because you can't do the normal advertising. And so social media and connecting to people and getting in front of them in an organic way was sort of all that was available. And now I think is a moment where you have a captive audience. And if you can get to them in this moment and develop a consumer pattern of behavior and basically throw your brand in front of it, because in my mind right now, a brand is just an experience with a name on it. People are understanding what these products can do in ways that they didn't even expect that to be able to be an option for them. And so, I think you can't fire your marketing team right now if you're a consumer business, because of anything that you need right now that isn't just core operations. This is your moment to grab that consumer, and be with them forever. If you can get them right now and be with them in a time of crisis, it's kind of how we feel like as an investor. Actually, this is our moment to lean into our companies. Hey, I'm there for you. What can we do for you? This is the moment to be a leader. This is the moment to show people that if you can be there with them in this time, the likelihood of them being a consumer of yours for a long time is very, very high.
I wonder if we're not very good at doing things as an industry. We have lots of industry groups. They're always buying for people's money. We have a lot of it's very fractured in my mind and kind of always has been. So, we spend time trying to pull people together, but I don't think it feels very much like that. It almost to me seems like this is a good opportunity for the industry to come together and have a messaging campaign. I mean, if we had a cohesive industry, we could be putting out a campaign like "Stay Home, Stay High" or something, right? That's stupid, and I'm a lawyer and not a marketing person, but somebody better than me, maybe somebody on this call, could convince this industry that we should be. Somebody just said, "Can I use that?" Yes. You know what I mean? We don't have, when we have, the Oregon Brewers Association, they do a big winter campaign, buy beer from small breweries or whatever. And we just don't have that. I wonder if you think this is a good time for the industry to pull to get their resources together in some meaningful way to really communicate that, especially in the States where, we can convert people to consumers.
I think it's a great point and a very important point, because you can define categories right now. It's a rare moment in consumer business, actually, to be able to not have to think about how do I get my product to be successful. I have to be cheaper. I have to be better. I have to replace somebody else on a shelf. It feels almost like probably how Steve Jobs and Wozniak felt when they had Apple going out of the garage in a lot of ways, and I bet a lot of you founders out there feel like this right now. You're onto something so special, like you get it. You see something that no one sees, you're ahead of it. That's actually the case here, because they had an opportunity to take technology when it was ready and put it in consumer products and tell that story at the right time. I don't know that this is any different, really. You're dealing with a technology. It's just a science-based technology, not a computer technology. And we're dealing with molecular, human-based homeostasis technology. That's what our body's always trying to do. So, the reason this works is because that science actually does work. And all these businesses out there in some way, shape, or form are trying to figure out how do they package up that experience and tell that story. Apple did it really well. I think you're going to see a lot of companies take these pieces and put them together and create an experience and tell that story. And if you can tell that story first, you get to create an entirely new product, an entirely new shelf, in an entirely new category.
It seems to me, and this is just my observation, and I have another question for you, is that over my years of watching this space, and I don't know if you've had the same experience just because we're on different sides of the not on different sides of the deal, but like we just see things from with a different lens. I have felt like the cannabis industry sometimes has a hard time seeing the forest through the trees. And I worry that from that kind of marketing perspective, that people are focusing kind of myopically on what they're doing right now and not thinking we're going to use this moment for like something big. It doesn't have to cost a lot of money. It doesn't have to be like a huge spend, but like, how am I going to get that message out? I mean, everyone's on their social media. Like even I like got back on Facebook just because like I want to see what's happening. Like I don't have any other way to touch the world. And so you have this opportunity to think to like really message out there in a big, meaningful way. I mean, I haven't seen like tons of cannabis press happening right now. Anyway, I wonder if we kind of turn inwards, I think, just because we've had to batten down the hatches so many times, regulatory changes, restrictions on advertising, limited capital, all those things we kind of turn inwards. I wonder if someone like you said isn't going to take that opportunity and run with it.
I think you have to, because before your next question, you just gotta, this is the moment where you connect with people's hearts.
Yes.
That's what they want right now. I'm telling you, you have an opportunity to take your story, and if you can give it to someone in an authentic, meaningful way, people are desperately looking for that right now. They want something that's good for them. They want something that's positive. They want something that feels like it's the right thing to do in life. People, I think, are reassessing their world right now. And if your message can come across that authentically, I think you're in a good position to try to have a business that, can make sense of that.
I mean, and I think cannabis really plays into those things, right? It's like people are looking for some fun if they're in a privileged enough position where they're looking for fun. They're looking for some lightness. They're looking for health benefits. They're looking for like a way to entertain themselves, like all the things that weed does. It's almost like you need a try me campaign or something. Anyway, that's a different webinar. So we were talking about like the kind of, because we're an essential business now, that we have maybe some more traction. But we're seeing in these states where we were going to have legalization measures that people aren't able to get on the ballots. Do you think that instead of like, we've really been seeing states one after another go through legalization, do you think because we're going to be restricted on some of those ballots, that attention and energy is going to be shifted towards some of our national issues?
It definitely will. There's going to be a focus on this pandemic, and rightfully so. I mean, there's a lot of things that are very, very big that need attention of a lot of people right now. And you saw that happen before this, though, with the impeachment. It took a lot of attention away from a lot of the things people were working on. And then that kind of led right into the pandemic. So we were also used to it, to be honest. It's not like we haven't fought against headwinds for decades and decades. So I think it will slow things down, but ultimately I don't know that it makes a huge difference in the end, because we always talk about the genie's out of the bottle, but now it really is. You can't deem an industry essential during a crisis and not give it the credit it deserves when not in a crisis. You just can't. So although there will be a momentary delay, I think that long term, the benefit is much greater than the slow, knock down one little city, one little state at a time. I think now you've got the national attention, the federal attention potentially. So that's where we really have to change the narrative, the grass tops. The grassroots campaign has been phenomenal, and it's very strong. All the variables are there. You can't believe it. It's got 90% federal approval rate for medical cannabis. We have taxes and jobs and everything you could want is there. Why hasn't this been approved and passed yet? It's a political reason. There's politics going on. So I think you have to also convince the grass tops to bring that pressure. If Big Pharma said tomorrow, Amy, we're going to bring the big Pharma in, and the weight of Big Pharma, we might all sit here and be surprised how fast this thing changes. It may be federal to legalization in effect tomorrow. I mean, and so I think, we really actually need the grass tops. And for that to happen, two things have to take place. The industry has to be big enough to get the big players into the business. We are getting big enough. We did generate $16.5 billion in revenue. Then you have to be properly valued too. And so fortunately over the last year, you've seen that happen. You know, a group like Tilray, great company.
Yeah.
What were they doing? 50 million in revenue a couple years ago. They were multi-billion-dollar market cap business. Now, and don't quote me specifically, but I understand they did 150 million in revenue and they're a 300 and something million market cap company. Well, based on the type of business they are, sounds like actually a multiple that they should be trading at. So the reality is they had a lot of these companies trading at valuations that were too big, but in Tilray's case, they tripled their revenue in a year and a half, tripled their underlying asset value in a year and a half.
Yeah.
And market cap went down 50, 60%, maybe more. So all that tells you is the industry is doing great, but they were misvalued. And a lot of that's because of the way the Canadian system is, just by default there. So, you know, I do think it's going to be delayed a little bit, Amy, but I do think that the bigger picture is that this changes everything when the big conversations are going to happen, and they're going to happen sooner. Last point I want to make, just because it came to mind about the types of branding products. On average, you can look up a lot of different materials that indicate 4 to 7% of the adult population in the world has, and for many, many, many years, has had a relationship with the flower of the plant
Yep.
in its flower form. That may not change very much, and it doesn't really matter if it does. It's a wonderful category for the industry. I think it may grow a little bit, but not everybody wants to smoke flower, and that's fine. It's been available. You could have always picked it up if you wanted to, pretty much everywhere in the world. So if you take that 4 to 7, you take a room of 100 people and you set aside 4 to 7 of them and maybe put them in another room, and you just look in the room, and now you're a business and you're saying, okay, there's still 7 people in here, 94 people in here that don't want that. How do I build a product for you?
Yes.
And so that's what's really great about the industry is there is a product that can be made, and multiple products for the 94 to 97% of the world that isn't even a current user really. So it's so big. The numbers are so big that I think if you break it down like that, you look at the opportunity that's there. You've got a lot of consumer categories and habits to be developed that aren't at all developed today.
So I want to ask, I see, just so Jeff, Lauren, Susie, I see these questions. I'm going to ask one more question, and then we'll run through the questions that people are submitting. So, I mean, will you spend 5 minutes talking about like just getting ready to go raise money? Like, people are going to need, in all different circumstances in this space, are going to need to go out and raise money after this. And, how can they be using their time right now to get themselves ready to go raise? And if they were in the middle of raising, like, what are they looking at?
Yeah, well, to state the obvious, the first thing everybody needs to do is go out and apply for the federal programs, because if you do it right, you get a couple of months of basically free cash. So you should, if you have employees and you can spend it right, you have to do that, A. B, the thing I think as an investor that we are seeing a lot of now, which wasn't the case before, Amy, is companies are coming to us they're more humble than they were before. And that is probably because there were a lot more people in their ear from the banking side and public side and all this stuff. So now it's where it should be. It's an emerging industry. It's with growth investors, equity investors, emerging investors. That's where it should be. So don't fear the world that's out there today in terms of you finding resources to grow your business. It's not like they're not available anymore. It's the ones that were available shouldn't have been there in the first place.
Yeah.
Pretty much, mostly. So you're back to where we need to be, which is, growth equity investing, venture investing. You'll see a lot of debt and credit as well. So depending on the type of business you are, there will continuously be more credit and debt available to you. I know it's hard to find right now. It feels that way, but it's that way for everybody. But as we talk to larger credit and debt providers, they're seeing the opportunity here. Where else are they going to go create return for themselves? I mean, credit markets are being destroyed right now. Debt markets are desperately looking for deals. They'll find them in real asset categories and real estate. But you can find that in cannabis too, because you can underwrite these deals such that you basically do it at 10 to 20% on loan to value, or you look at assets and you're just underwriting assets. So you're going to get a lot of debt and credit that's attracted to this industry right now. And that helps flow downhill. And you get those big institutional players in finally, everything that happens at the higher level of the value chain from an investor standpoint encourages the investors below them, you know, the angels, the seeds, the A round, the B round, the C round, the D round, the pre-IPO, the institutions. As you roll up that, you know, the more you get the bigger guys to buy into this, the more encouraged everybody else is, because we get to see through, you know. So I think you should be encouraged. There's credit and debt coming. That's good for everybody. Good for everybody. If you're a smaller company and you're in your angel or seed round or A round and you're looking for equity, don't be fearful that nobody's out there. There are a lot of funds that are having these conversations for you. And that's our job. We're not operators. I'm not here to tell you what to do with your business. I'm here to encourage you and help you make a decision when you need that. Yeah. But ultimately, we are an extension of you. And so all I need to be doing is going out to capital sources, convincing bigger and bigger capital sources to come into the industry through investors who know the industry and care about the industry, so that we structure and build it the right way, which is what they want to do. They want specialty managers. You know, they want Andreessen Horowitz to run their money in the 90s because they want them to build an internet and .com company. So the bigger money will actually flow through managers. Managers care, they're niche focused, we love the industry. We put our whole lives in the industry. You know, the big institutionals have it. So you want that buffer so that you don't have to deal with them right now. Let us get out there and sell your story, bring capital in. And I want to tell you that we are having very good conversations because you're allowing us to. You're giving us data that we can turn around and sit at that table and fight for you to have more resources. And the conversation's going really, really good. Investors want to put money to work. The shell shock is not over, but it's going away. And people are now looking at this new world and saying, what do I want to support? Yeah. And this industry has more reasons as to why it needs more support now. So we are having good conversations. That means good conversations for you. I can't do anything if what's that?
You are a ray of sunshine. This is the best, like, hearing that. I don't know how it makes people on the call feel, but like, it makes me feel good to hear you say that there's still capital moving out there, because it's hard to see, I think, for everybody who's not in your position. It's hard to see that there's still money, that, like, because what we read in the news and what we see otherwise is like that everything is kind of frozen. And so hearing you say that, I think, my guess is, makes a lot of people on this call feel better.
It's coming. And that's a great point, Amy. I think you just have to figure out how you're going to get by these next few months. Yeah. Because we all just got busier than normal. Yeah. A lot of people in this world are sitting at home wondering what they're going to do with themselves. That isn't happening to any of us. Yeah. We are all working harder than ever, because there's opportunity. You wouldn't be working that hard if there wasn't. So you think it's desperation, or my business is going to go under, I'm never going to find funding. You can't think like that. You can't think like that. That's I'm sort of a God guy, and you know, I believe that way anyways. And you know, but I think in general, you have everything you could ever want to support the fact that you should be optimistic right now. And the harder things are, sometimes that means greater opportunity. And I think in this case, the villain's so big that if you can fight this and win.
I wrote it down.
It's coming.
Villains create heroes. While you were talking, I wrote it down because I loved it.
It's David and Goliath.
Yeah.
Right? Think about your greatest sports moment in history. Your greatest sports memory, I promise you, had to do with the fact that it happened against an opponent that was that much greater of an opponent, right? Your villain, your adversary. And so if I told you that the industry wasn't growing 30% going in the pandemic, now you should think differently. If I told you that all these other things weren't happening to bring in these institutional players and to bring in large players to get interested, then you should be thinking otherwise. But I'm telling you, all of it's out there. And again, you are giving me the ability to have a strong conversation as operators. that is where we base every bit of our dialogue. We talk about what you're doing and how special it is to these large pools of capital. Now, if you look in the United States, 97% of the available capital out there to invest in any business of any size is in the institutional class. It's in private equity, it's in public markets, it's in endowments, pension funds. You can't believe how much money's there. That means 3% is with venture capital and angel investing. It's so small, but it's okay, because that's what the government did in the 70s. They recognized that companies that were trying to grow needed to have investors that had an advantage to building strategy for them. And you have that in venture capital. You get venture exemptions, you have less requirements in terms of regulatory, and you're able to kind of do more, you have more flexibility, and ultimately capital gains. And that gave birth to Microsoft and Apple and Amazon and Google and Facebook and you name it. And that's what venture capital and growth equity investing is here to do for you. You don't have to run to some public market. You don't have to sell so quickly. You don't have to raise more capital than you think. The industry's growing. The capital's coming. Groups like ours are sitting in between. I can promise you the conversation is better than ever. Better than ever. I sit here and talk to these big investors right now, and they can't believe the story. They're not hearing a better story anywhere. There is no better story. We're good for you. We create jobs, tax revenue. It's all here. It's all here. And the conversation is just getting better for us.
That's amazing. And somebody just called you sunshine, and I think that that's right. So this is just what we need on a Friday. I'm going to ask some of these questions out loud so people, because everyone can't see the chats. So Jeff from Workshop, how will people be able to buy more cannabis when they won't have enough income for their basic needs such as food and rent? Current financial models need to account for the shrinking economy as to be accurate going forward. As medical products aren't reimbursed by health insurance, shouldn't we all be legislatively pushing for that change right now?
Yeah, consumer habits will change. Now, in cannabis, you haven't seen a lot of value brands really yet. Old Pal, you have a couple of these value brands that are coming to the market, but you haven't really established that part of the industry to in many cases. So you have very expensive product. I think what you'll find is that you're going to have a lot of value brands come to market. We know a ton of them right now in every category. And so, you're trying to buy product cheaper. You're trying to do certain things, scale. But I do think you're going to see value brands become a thing. And that will certainly, we'll have to see the data behind that. But it's okay. It's okay to have value brands. I think you have to have every kind of category and they'll be developed for those consumers. But I don't know a scenario that if this is medicine for you and you have value brand and you look at the things, and I've got a lot of data and charts I can send you right now that are very interesting that look at all the things consumers value. I don't know that this is one of the things that if this is a product in your life that you use that you're willing to give up right now. We've seen the data, and I'm telling you, it's there. You watch a lot of the White House press briefings, and Trump always gets in trouble for saying things before they happen. Like, we don't want to say that this is recession proof. We won't yet. We don't want to say that cannabis is going to continue to be sold, and with the few dollars that consumers have left, they're going to go to cannabis. But it looks that way. It's starting to look that way. It's starting to look like people are going to continue to keep this product in their world. And in fact, buy new products and increase expenditure. So look, I think the world, at worst case, you're talking about 12 months to 18 months before there's a vaccine. So what happens between now and then? How comfortable are consumers? I don't know. I don't know the answer to the general question of the world's consumer habits, but I can promise you, if you're in an industry that can continue to sell to them, you're going to be just fine. So we'll provide data, keep checking data. BDS Analytics, one of our companies, is phenomenal at that. Headsets, New Frontier. There's great data sources out there that you can track. But I think as you're here today, without giving you a for sure answer, I can't imagine that there's another category that has as much encouragement as ours does. Check back in on that and we'll find out.
So we have our next question, and I think a few people have the same question, is where do I start meeting investors and what should I have ready for them?
Oh, that's great. That's a great question. The best way is to participate in these actually right now. All week long, we find that all these cannabis media sources are putting together video communities. And, I see a bunch of good people in the chat right now. Everybody who's sitting in my seat that's an investor that has the opportunity, and we're so thankful to be able to do these types of things, everybody that has this opportunity probably has a LinkedIn. And so, I would encourage you to look through all of your various media places, Google around, try to figure out where these types of gatherings are happening. They're happening all over the place, more than you think, actually. Leaders of industry in every category are sitting at home, desperately trying to have community and talk about things. So reach into those places, find as many of these as you can, see what people are talking about. Find out what resonates with you, and then maybe go to LinkedIn and send a message that's very brief that said, saw your chat, you inspired me, here's what I took away, and the reason for me to connect is I think I'm onto something that, based on what you said, is very interesting. I don't know. I mean, something that simple, actually, because a guy like me or a guy like Amy may not know everybody on this call, and so if you reach out to us and you were there for something that we spent our time on, you have a very high likelihood actually of connecting with somebody that was talking. So I would encourage you to do that. They're out there. It's actually much easier to get in one of these rooms than it is a room of an investor, a great investor you're trying to find at another place, to be honest with you. And then you can be efficient with the follow-up and communication. So I think that's a great way to go. I've seen it work. I've done a lot of these. Every week we're doing a lot of them. And I actually find it to be encouraging to go into my LinkedIn or go on our webpage, ARCADIANFund.com. All the other funds have this as well. If you just reach out and say, I was there, thank you for spending that hour. I like some of these points. This is why it resonates with me. You really connect and hit home. And I think you'll have a high degree of success in that strategy.
So the other piece of that question was, what should people be getting ready? And I think that they're asking, like, do we get our pitch deck? What do we put in our data room? Like, what do we get ready? So when we need to hit go, just like the actual technical things they need to have ready.
Yeah, that's a great question. So depending on when capital starts to flow again, and look, even the great funds, the big funds, this first month has been very difficult because you have 35, 40, 50 companies, and you have to take care of your children first. You just have to. And so you have to go make sure that everybody's fed, everybody's got what they need. There's problems, there's not problems. How can we solve them? And then you're constantly, doing that. So to a certain degree, the first part was really what's going on with your current portfolio. Let's make sure everybody's okay. And then it was, okay, we're looking at a lot of deals. What are the ones that are, we spent the most time on, we're close to getting done. Let's really focus on trying to get those figured out. And so I think that first month you had people lean into their own companies. Then you started to bleed into, okay, the great deals I'm already looking at, let me see if I'm going to do that or not. And then I think right around now, or maybe this week, next week, you're going to start moving into a phase where, all the investors and funds are now sort of, okay, my house is in order. Okay, I've got everything set up. We're kind of working remotely. My analyst, my diligence team, my partners, we can make decisions. They're getting comfortable again. The industry's showing good numbers and results. So I think probably next week and the week after is the first time I would say that you want to actually start reaching out to the great funds and great investors. But I still think you have to do it in a mindful way. You got to be really efficient. So I always like when someone sends me something that says, hey, I've looked you up enough to know this is generally what you guys like. This is what, and I think I fit that category. So I don't want you to know that I didn't actually think about qualifying myself before we had this conversation or I reached out to you. Or you may even say, I know what kind of group you are, and maybe I'm too early. Or maybe this isn't perfect for you, and I recognize that, but I still think that you need to be aware of this. So I want to tell you something. But I think you have to make sure you at least understand who you're trying to talk to, because they'll appreciate that. And then I think you want to do it as efficiently as possible. Hey, you're a smart investor, you know the industry. Here's 5, 10 bullet points that I think are really important for you to know. You know, we've closed one round outside of financing. You know, we were growing 25% leading into pandemic. We're now growing at 10%. We feel like we figured that out. We were going into our A round. We were going to do a convertible. We feel like we're a good deal because here's the rest of the market players. Here's our market share. And, you know, we want to get this closed. We think we're a great business. We're going to do a discount to the next round. Love to have, you know, something that just frames it. I know that's maybe giving away a lot too much information for somebody in the beginning, but I promise you, it's better for you and better for the investor right now. People want to be looking at deals, but you have to give them something that a lot of times, Amy, I get, you know, the first entrance hasn't really thought about who we are. So it may not even make sense. So that makes you as an investor kind of, you know, not think as highly of the deal. And then they'll send some long thing and you have a lot that's going on in your life right now. So it's not like you don't want to get to it, but if you get a bunch of those every day and they're really long, it's going to take you a lot longer to make time for it. So I would say make it brief, make it concise, really try to just put the major points as to why you think this person should hear about your business. And then if it works, go into more detail. But, you know, I would say be efficient, be precise, take the steps. Don't try to load up everybody with details right away. Just give them the main stuff and then give them what they ask for as they move forward. Because these investors, the smart ones, really do know. You could almost just say, here's my data. This is actually what we see a lot right now. Once you actually qualify it and you get into a conversation, we see a lot of great companies that say, hey, we got a great thing going. We don't want to fight anybody. We'd love to have this group of investors in. Here's our information.
So it seems like, summarize that? So it feels like what you're saying is like, we're busy and shit's crazy and we have a lot of information coming. And what we're really looking for is for people to have almost like a condensed, like everything condensed. And that like, this is going to be particularly data driven. We want to know your information. We want you to have your financials in order and in an easily digestible fashion. So I'm not like wading through lots of stuff. We want a condensed deck that's focusing on, particularly for you guys in the stage companies you invest in, like you're looking for almost like a condensed raise packet that has like all the crucial information that's easy to access, that is not like, you know, a huge email and like 27 pages in their deck. You're looking for clear financials, easily articulatable success, and a short email.
That's it. And, you know, what's interesting when you're a founder and you're with a business from an equity standpoint, you tend to be so passionate about your business and you have so much information that from your perspective, when you put that together, you may think this is a condensed version. But for an investor who maybe seen it for the first time, or who knows what's going on in their life, depending on how busy they are or not, think about it from their perspective, right? Like, what's a condensed version to them?
Yeah.
And so that's what bankers actually do a really good job of. Bankers, they don't have a lot of emotions in businesses. They'll tell you they do. And they're all gone now, right? It's still the equity investors that are here with you. And
that's right.
For better or for worse, for sicker or poor, till death do us part. We're with you. So, you know, I think in a lot of cases, the right investors are there now. But if you just look at the investor and think about it from their point of view, the bankers would say, hey, I've got this company. We think it's a good criteria because we know you for your fit, for your mandates. And they'll just throw out 10 bullet points. Here's why. Here's the revenue they did the last 2 years. Or here's the team that they just hired. It's not a whole lot. It's just enough so that the investor can say, two takeaways from this. And we're just making this up as we go. Make sure that the investor knows that you thought about them. The person you're reaching out to talk about financing knows you've thought about them. in some way indicate that, because that will make a difference. Don't see that a lot. And then make sure that you've presented it so that it's condensed from their perspective. I would even think it would be cool if some founder sent me an email that said, hey, you guys, we know who you are. We think we're around, maybe even too early for you. I want to be on your radar screen. Here's 5 reasons why. And if you don't mind, I've taken the opportunity to write out 3 questions that I'm dying to have an answer for, and just feel like if you may have a couple of words to give me an answer on these. Nobody's ever sent me an investment deck ever that asked me a question for them with a blank in it, like a fill in the blank, ABC maybe, multiple choice, I don't know. Just engage with them. Think about your investor, make it condensed for them, make them think you know about them. I mean, really do know about them, don't make them think that, but take the time to care and know about them.
Yes.
And then indicate that in a short, condensed way, and I think you'll get their attention right now.
So I have somebody asked a question like in the reverse, and I think it's a good one. What criteria do you recommend for evaluating venture firms when you're looking for capital? So we are like, we're thinking about how you're viewing the companies, but how should we view the investors? How do we evaluate the funds that are out there?
That's such a great question. We're very passionate about that answer, and it's because I truly think we've done things right from the beginning, and it wasn't easy to do that.
No.
Very easy to get distracted by all the shiny objects and big talk and we're the first, we're the best. That was never really the feeling that we wanted to be involved with. We wanted to be involved with, hey, we're one of the best. We're good. We're really good. We got something great. So, you know, anyways, it's a question we're passionate about because early on, you saw a lot of investors that weren't there for the right reasons.
Yeah.
And I think a lot of them are gone now, to be honest. They're gone because they're fee driven, they're transaction driven. And so that's the first one. You got to ask, what's this investor's interest in me? If his interest is in getting a deal done and I never have to talk to him again, that should, you know, categorize him. Not saying it's a bad thing, but it's a banker. If you're equity and you're an equity investor, then that's probably someone who you want to work with more because they're going to be with you a very, very long time. Now, within the equity grouping and category, we think there's probably, 20 really good funds, maybe 25 nowadays, but there's really 10 that have consistently proven themselves for years. And all you got to do is go out and ask those companies. I mean, go on any fund's website, look at their portfolio. You're going to know some of the folks there, or you can very easily find somebody that was involved with that investor for a long time and just ask them, how's this person been for me? Were they there for me? Did they go beyond the call of duty when they were needed? Have they been fun to work with? Just go reach out to some of the other portfolio companies. It wouldn't take very much time at all. But this period of time is going to weed out a lot of that for you. It's just going to, because you're going to see who's there and who isn't. And if you're with ARCADIAN, I promise you, I don't care how dark it gets, that alley, we are going down there with you. We're going down there with you because it's the right thing to do and what we signed up for. But also, I've actually seen a lot of times where you go down that dark alley expecting the worst and undermanned and maybe under-resourced, you still can come out victorious. And we find ways to get it done, even in the face of certain death. You actually, doesn't mean you're dead until you're dead. That you never can think that, ever. In fact, I ran into Charlie Munger the other day, who's Warren Buffett's right-hand guy, wonderful investor. He's like 90-something. And it was just before the pandemic. And I remember trying to get some of his time at this gathering we were at. And I tried to bring up cannabis. And I framed it because I was asking about emerging industries and trying to get his take on how does he think about emerging industries. And I didn't even get to cannabis, actually, because a little bit. But he started to get away from the conversation from where I was taking it and said to me, I love emerging industries, young man. I said, why is that? He goes, because they keep me young. And I said, oh, that's great. So you find passion in emerging industries. You think they're, and then he said, well, you know what? I think it's a mentality. And I said, what's that mentality? He goes, I still to this day do not feel like I've peaked.
Huh.
And I thought to myself, you're 90 something years old and that's your mentality. Like you still have more to give. You still haven't done your best work. You still haven't peaked. So that's the mentality we have with our companies. We never believe like the potential has fully been reached. And even in the face of death, in a lot of cases with companies, it's a strong word, but that's what happens sometimes. We're never gonna be anybody that kills you. We're gonna be the one there to the very end, resuscitating you. And you can even in that scenario. In fact, you look at the success stories of a lot of businesses and a lot of very wealthy people. They face that, and that may be the moment that created all the greatness. And
Yes.
so you're going to find investors who will be there with you all the way to the end. I think we're one of them, but there are a lot of others that are like that as well. Ask around about your investors. It's just as important that you have the right investors as it is for an investor to have the right company.
So I'm going to condense a couple of these questions because I think they're similar to each other. We have a few people who are asking about small businesses, seed rounds, early stage rounds, craft cultivation, and they're asking, are you, how? Let me ask it exactly. How do you think that these small businesses who are still doing some like really early stage fundraising are going to be able to attract investment? So I mean, people who are not doing their Series A round or Series B round, these kind of not quite startups, they have a little bit of traction. They can't access any of the stimulus that the federal government is putting out there. What can they do to attract investors? I think that answers like 3 or 4 of these.
Yeah, it's a great question. I know that's one that many of you are in the middle of, and I certainly feel for you because it's not easy. It's not easy right now, and this is the world we're living in. So I think the quicker you get to digest that and be okay with that, the quicker you can get to thinking about it opportunistically. You have to. You have to right now. You can't think about it any other way. So, you know, I think you probably better serve not forcing the issue. As hard as that is, you don't want to push any of your investors you're working on away either. You don't want to do that right now because a lot of people are dealing with a lot of different things. We have a lot of investors, for example, and 55 investors in one of our funds. And some of our investors made their wealth through casino business or hotels or restaurants. And even though they may be very wealthy and capable, they're hurting right now and really hurting. We have some investors that have had a death from Corona. We have, so you don't know what investors are dealing with first and foremost. So you have to be sensitive right now. You can't force the issue. And so as hard as that may be, you have to recognize where somebody is. So do a lot of a question asking, how are you doing? Where are you? If you're engaged, by the way, with an investor, how are you feeling about this environment? And then you try to talk about the positives the industry has, of course, but the best thing you can do is not push them away. I know as a small young company, you really don't have those luxuries as much, but you have to be thinking about the big picture as hard as it may be. Amy, I'd turn the question around to you because you deal with a lot of angel and seed stage companies. I'll tell you, ArcView has a good new venture fund that they're running. So I would reach out to ArcView Ventures. They have a member managed fund that's a really interesting topic, and that invests specifically in startups. You're actually starting to see a lot of startup type accelerators as well. Amy does a wonderful job, really led the way on that, Canopy Boulder, but a lot of companies are doing them now. Ease just did a really phenomenal class. I would encourage you to reach out to Ease. I think High Times is going to do something. Weed Maps may. I've heard a number of people that are leaving Y Combinator that used to work there that may be launching something. So stay on the lookout for those types of groups that are building strategies around this specifically, because those exist. But Amy, what are you seeing?
Well, we've mostly heard from companies who are having a hard time. And we talked about it before we hopped on, you and I. Mean, what we're seeing is people who at this stage are like everybody, restaurants, other small businesses with just a few employees. Right now, it feels like they almost need a very small bridge loan. or a very small bridge funding to be able to get at least to a place where we're coming back out the clouds part, and we're able to go back out and actually take meetings and have meaningful conversations, and we see society opening back up. And so I'm mostly hearing from companies who are like, when are we going to get some help for the cannabis industry? And so from our part, we're working with our senators directly and our representatives directly and the lobbyists who are working in DC. Like, we're in constant communication with them, trying to say, look, we need some real aid. And I think in the if we're not going to get that from the federal government, I think, and we were talking about this earlier, it's time for the cannabis industry to step up and say, we actually care about small businesses. Like, we're going to provide some support for these folks. And like, I think that that's because of other than going and doing a real raise, which I think feels insurmountable for people right now, they're really looking for that kind of bridge funding. And I'm concerned, and I think somebody asked this Lindsay maybe asked this question, is like, we're, even before this for debt, we were not seeing very favorable terms for cannabis. And so, Lindsay asked, and I think it's right, is like, do you think we're going to see some reasonable terms for the debt deals that are happening? And for like, if there's a lot of credit and debt that's available, like, how extortionary is that going to be?
Well, it's going to be not the greatest, to be honest, for a little while. But the debt is primarily for heavy asset-based businesses. I would imagine that a lot of the companies on this call may not be in that category yet. Maybe never. That maybe you're a software company or something. But a lot of the businesses with heavy assets right now, the multi-state operators, are going to have debt terms that are going to look 10 to 15%. They're going to look like 20, 25% warrant coverage. They're going to have a lot of other sweeteners in it as well. And it'll be senior on the cap stack to everybody. And that's just the reality of those assets being overvalued. Now, they're great companies. You're going to see, that's why you're seeing this first wave of credit and debt going to the very top first, because they want to make sure that they at least have all these big assets to, underwrite. So that's, again, encouraging for everything else that's going to come. But somebody else in the chat was talking about merchant processing, credit cards. These things change everything. It's very difficult right now because if you touch the plant, you don't have a ton of options on debt and credit side. If you do sit on, if you're on the ancillary side, you have a lot of options actually, and we can help you with those. If you have a question for that, email us directly. We have some great resources from non-plant touching companies. Plant touching is still really private, but private lenders. But because you're seeing it happen up here in these, I think it rolls downhill to where we were talking to a lot of the banks the other day. We participate in these calls with a lot of the banks that do bank this business, and they ask us questions about what we're seeing, and they use that to go back to their board and they're trying to fight the same fight we are, by the way. You can't imagine how many great bankers are out there that are passionate about this space, that have convinced their bank to allow them to do this. And every day, all they're doing is trying to fight the same thing we are. So you have people there doing that, but you have to realize that everybody is fighting the same battle. And the thing that has to happen is you have to have the state banking acts. You have to have FDIC allow for some of this. And as soon as you do, now all of a sudden you have all these community banks and you have all these state banks and you have all these people that are going to allow you to take the credit and debt that you deserve. And that's really where it starts to change, because the private lenders that are coming in, and Amy and I were talking about this earlier. Amy actually had a really interesting idea about putting something together just for this situation where you maybe have 10 to 20 grand for small companies, and you have a bunch of stuff around that, maybe from some big brands or MSOs and some opportunity there. But and I think that's genius, Amy. You should talk about that after, maybe or even now. But the answer is, when you're a small software company, you really need banks. You need banks. You need people that are going to do that, because that's what they exist for. And I think because of what we're seeing happen at the top level, I do believe that that's going to happen quicker. I do believe that institutionals are more attracted than ever. That means that these bills that have been sitting around the Senate and sitting around Congress for a long time probably have a better chance at getting through when we get on the other side of this. So short answer is you do have to find a way to get through these next few months. You do. And it's unfortunate the SBA program did not allow for that. Now, on the hemp side, you do have some of these things. I know Amy has a lot of this information, but you can go to places like Hoban Law or Foley Hoeg, or go to some of the great cannabis law firms on their website. They have a tremendous amount of information. Would encourage you to go there. And because the data is great from BDS and Headset and so forth, but the legal work that these cannabis law firms are putting up, they believe in loving you too. And they want you to have this information and not feel like you have to pay them $1,000 an hour for it. Like, it's there. Go see what they're talking about, because they're fighting the same fight. They're having this conversation with lobbyists and with, legal people to try to get access to some bridge financing and some loans. So definitely go there. But the answer is it's coming. And as hard as it may be, and I wish I had a crystal ball and I could give you the perfect answer right now. I wish I had a strategy that I could just do it myself. I really do. I wish we could just give you all everything you need and do it personally. Hopefully a lot of us in this space will have the net worth that's created from this space such that we can continue to give back more. All we want to do is give you guys more. I don't even do anything if you guys don't perform. I mean, I'm a middleman. We go raise money from people and we give it to you and we manage it for them. So we need you more than anything. We always do. But, we're out there fighting for you. Everything you do allows us to have that conversation. Then that allows us to have that conversation with bankers that then have to have that conversation with their boards. And it's happening. It's happening. We wish it happened quicker. But we're going to be able to get through this together. That's for sure. I promise you that. We're in a place that every day we do. I sit here 7 a.m. to 11 p.m. every day and don't stop. Never, not once for the last month, not a day. And that's because there's a lot of great work to do. And so just trust that there are people that are having a lot of conversations. You're having them, I'm having them, we're all having them. And the information and what we're seeing is going to allow us to have better ones. And what you need is coming. It's coming. So just keep fighting. Keep making sure that you do it together, because that's the only way it's going to happen, is collaborate. In fact, it's going to happen either way. But if you don't collaborate, then what will happen is the big players will come in and take it from all of us. Okay, so we have to be strong for that reason. It'll happen either way. Let's make sure it happens the right way. It's going to happen. It's coming. Wish we had a better answer right now to fix that for you. But the work that you do will allow you and me and everybody else, as the years go by, when something happens again, we'll be bigger, we'll be more resourceful, we'll have access to more things, and we'll be able to take care of them. So maybe the work you're doing now actually makes the next entrepreneur's life better.
We have two more questions. They're connected before we lose you. And I'm going to ask them together, even though they were not posed together. The first is, are you still seeing large cannabis operators and MSOs investing in cannabis companies? And the follow-up to that is, will you talk a little bit about valuation under the current circumstances?
Yeah, valuation, they do go together, because these MSOs, you have to think about it from their perspective. Again, anything you do right now, make sure you think about the other person's perspective. So why are these MSOs doing this? Well, they've got a big public stock, and they've got to sell the story to their investors. And mostly that's in retail investors right now. You don't have a lot of institutional investors in public companies, so in cannabis. So you're doing two things. You're trying to sell the story. Oh, we have a differentiated product. Oh, we just got this market. We're going to be good because we did this. So they were doing that, and a lot of it was stock anyway. So even in the days where money was just flying off the wall, it was still largely stock transactions, to be honest. So now that that has gone away and stocks have to be proper, thank goodness, this is great for all of us. Then you're going to have less of that happening. They're not going to be doing as many stock deals. People don't want the stock. Sometimes you have to, because you have no other option, and if the company's dying and they just need to take a lifeline, say, fine, I'll take stock, take everything. You'll see that too. So you'll see deals, but they're either going to be really, really good deals, and you're going to see the cash that's left over be spent. So when you're seeing these transactions, pay good attention to how much is cash, how much is stock, because that makes a very big difference in the confidence in the deal. And then once you get beneath how the transaction's done from like a paper or cash standpoint, valuations is a driving factor. And I think that's one of the reasons why Arcadian has actually been one of the more well-performing funds, is because that was our foundation. We built everything on being properly valued in terms of when we enter a business, and largely driven by valuation metrics that take such things into consideration into the conversation, which are, let's look outside the industry. We do this with every company, no matter what stage it's in. What does a business like yours trade at in every other industry that's not cannabis? You have to make sure that you understand what that number is. If you're a software company on the CRM side or the data side, if you're a agriculture business, a manufacturing company, a brand, a media, look and research what you should trade at given where you are and where you're going in any other market outside cannabis. And come into a conversation with an investor with that understanding to be able to defend the fact that, hey, we don't comp other cannabis companies. That's what got us here. People got to go do crazy things like trade an agriculture business at 100 times multiple on revenue valuations in terms of comps. If you're doing comps and you're looking at cannabis, that is not a good thing for you to follow. If you look at an agriculture business not in cannabis, you'll notice it trades at 1 to 3 times revenue probably. And so the valuations were so off that even though the companies grew 36% at macro level last year, they are down in terms of stock value. And so valuation is critical right now. The biggest companies now understand that. They have no choice but to. They've had to deal with that for the last year. Good news is they did deal with that going into the pandemic. We were largely valued properly. And so, coming out of this pandemic, maybe more so because of the pandemic, but also because of that valuation correction in the public markets we talked about, it's more important than ever to be properly valued. So much so. So again, look at outside the industry, look at your market share in the industry, look at the other companies in your industry, make sure you have a really good place that you're coming from when you talk to an investor as to why you deserve a certain valuation. If it's a premium valuation, why? If it's a discount, why? But speak from that central point, which is what your business is not in cannabis. But valuations are important because I think what we're seeing now is a lot of companies will come to us or the other great funds and say, we know you guys know the space. Rather than me sit here and try to tell you what I want to do with this company and this deal, how about I present the facts and the data, and then you help tell me what kind of deal you would do, because my interest is in financing this company and continuing to do work. That's our job, actually. My job is to make sure you do more work than wasting your time with investors. That's not good for the business. If you got a great business and you got a good thing going, it only makes sense that you spend more of that time doing that, not wasting your time with people like me. We ought to be able to make that easy for you. So, valuations are being set forth like that in a lot of cases right now. I would be open to saying, hey, Mr. Investor, Mrs. Investor, if you want to do tranched capital, we can do that. Have it come in when we meet certain marks. Do you want an independent board? Do you want quarterly forensic accounting, on-site field examinations? Do you want different corporate governance structures? I mean, all these things that, typically companies come to an investor and say, here's my offering, and we're going to talk to a bunch of people and hope it works for you. I think it's different. If you come in and say, hey, we're doing something really amazing and think you're a good fit for it, let me just tell you what's happening. Can you tell me how you would structure this deal? How would you finance this deal? What in your mind? And I think you find that a lot of smart investors actually would appreciate that. And the reality is probably going to give you a pretty fair deal if you let them do that. And you may end up just taking that deal. And now all of a sudden, maybe because you let them do that and control that dialogue, maybe you just get a deal done pretty quickly, actually, and you can get back to work. So, the future's so big and the future's so bright that I think the end of the day, if you do a deal and you're off a few percentage points here or there on one side or the other, what's more important? That you get a few points a few valuation points here, a few valuation points there on a particular structure, or that the company wins. Okay, it's so big. It's so big. It's like you're financing companies right now at 20 cents, 10 cents on the dollar from where you're going to exit it. So does it matter if the deal's worth 21, 22, 25, 18, 17? Yeah, it does. But the reality, if the company loses, doesn't matter at all. If the company wins, then that's all that really matters. You won't be thinking about it. If you sell it for $1, do you care if you got in at 22 cents or 18 cents? Okay, so you have to get more focused on the big picture. Good investors are doing that now. We see that it's coming. We're fighting for you, and just let investors do their work. I think that's a big thing for this industry right now.
Well, that was, I know we kept you 20 minutes longer. That was really helpful. I'm going to call you next time I need a pep talk. Does anybody have anything else? I'll stay on for a few minutes if there's anything else. Matt, we're really appreciative of all the good work you're doing out there. So hopefully we'll have you back, maybe in person soon, one day. But we really are super appreciative, and you can see everyone saying thank you on the chat. So thank you.
Thank you. God bless you all. Work together. Work together, work together, work together. Two things. Do what's right, work together, and you will be okay.
Thanks, Matt. Be safe out there. So does anybody have any other, I'm going to stay on for like 2 seconds, or as long as anybody has any other questions. Do you all have other questions out there that are either related to that or anything else you want to ask? If not, we will say goodbye. I think for those of you who are on here, I think after listening to this, the next one we'll do is a marketing, social media, PR one. So keep your eyes open. And then somebody asked that we send out a resource list for where you can go to find information. And we'll keep sending those out in our newsletter. We sent out the grant one. And that's it. Thanks, you guys. And if you need anything from us, email us at info@intheinitiative.com. Bye. We're signing off. Thank you for coming.